Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at Brevant.com/wins.
Welcome to Markets Now. I'm Michelle Rook with DuWayne, Bosse of Bolt Marketing. Well, we ended with corn and cattle futures to the plus side, kind of a lower day in most everything else. And DuWayne, let's talk about this corn market because we have been very resilient, even in light of the fact that you've got this big harvest on the way and really a lack of government information.
Yeah, right. Yeah, no government data is kind of makes for a boring market. It was really quiet today, but I will say I am impressed that we closed near the highs of the day. 421 and 3/4 on that D's contract. That's nice. The reason I'm a little surprised, I keep thinking you're going to see more farmers selling here as harvest rolls on. The weather's been near perfect last week. The forecast is good this week. Some rains in North Dakota will slow some guys there down, and a little bit of rain in Iowa today, but most everyone is welcome the rain because this moisture level is getting a little dry on some of these grains too.
Yeah, which I want to talk about that in a moment. We talk about the government being shut down. We have had a lack of information. The one exception, export inspections out this morning at 63 million bushels. That was a pretty good figure for corn, wasn't it?
That's a good number, and I was surprised to actually even see that report. With the government shutdown, we're playing a lot of guessing games of what reports come out. I don't think we're going to see a crop conditions report this afternoon, but you never know there too. But yeah, that was a very solid number for corn. Export demand has been good, and why wouldn't it be, Michelle? I mean, we're low price, we're a low currency. We're the cheapest corn in the world. So I would expect everyone keeps buying our corn. And honestly, if we ever got a trade deal done with China, I wouldn't be surprised if they buy some of our corn as well.
Do you think the market has been so resilient just because we are seeing these yields come off the combine and because of the dry finish, they're just a bit disappointing?
Well, I think that's definitely helping the market. Whenever you have these USDA reports, and we had the one that had the big number, right, the 189 for yield, and since then the September report came in a little bit lower. So I think we feel like we've seen the biggest and worst crop report from USDA with the highest yield. And really, yeah, the yield reports coming into our office are a bit disappointing, and they probably should be, Michelle. 99 million acres of corn planted. That means we're not all in Iowa and Illinois. That means my fringe area that's behind me planted a lot more corn, and we're not going to yield the 230 or anything. So I think that yield does come down. I'm at a 180 myself. I'm going to hold there for now until I see anything different.
Do you think it helps us or hurts us that we're not going to maybe have an October WASD? Would we have been disappointed because we know their yield is coming down, but USDA maybe wouldn't have come down as fast as we'd have hoped?
That's an interesting way to look at it, and I think you might be right. Last time we had the government shutdown, these markets actually inched up a little bit, just concerned of not seeing the export sales, not getting the USDA reports. And you're right, for me saying that the yield's going to be down to like a 180 due to like dry grain conditions. Remember, we had that last year too. Soybean harvest came in and so many beans were harvested at 8 or 9%. The yield dropped quite a bit. That wouldn't have happened in the October report, which is scheduled to come out on Thursday, I think, this week, and it won't now. So in one way, you're right. Maybe the futures market is a little bit faster adjusting than USDA. They don't like to make quick adjustments. So we might be better off not having that report this week.
So at the same time, we're running up into some chart resistance, and we've been unable to take those areas out, right?
Yeah, we do. And I think it's going to be hard for the market to rally a whole lot until harvest is well behind us, Michelle, for a couple of reasons. The first being just farmers selling. Storage costs, interest costs are higher than we were in years past. So I think farmers are a little quicker to sell on rallies. So like if we get into that gap there in December, I think this market, the farmers step up and make more sales and then push it right back down. So yeah, it's going to be hard to rally even with good bullish news.
Soybeans taking a little bit of a break here today. Do you think soybeans set back just because we ran up into chart resistance, or is that market just waiting to see if we get this trade aid news?
I think the market is waiting to see if we get the trade aid news. I think farmers are waiting to sell to see what the trade aid news is. I think, which surprises me a little bit, Michelle, because I don't think it's going to be like an instant payment with the government shutdown. I think it could take a while. I think the government wants the money in farmers' hands before the end of the year, but I think farmers are holding a little bit to see. But once we get the announcement, I'm afraid you see more farmers selling. And I think the soybean market grinds back down to last week's lows. We could even take that out. I mean, it'll depend on yield forecast coming forward. I mean, I've got my soybean yield down a little bit, maybe 53.0 versus USDA's number, but man, I think there's got to be a lot of farmers selling ahead of us and a lack of bullish news. I mean, it's great that we might be close to a trade deal with China, but if they're not going to talk for 3 or 4 more weeks, that's just a lot of time ahead of us.
Yeah, we really got the Trump bump last week in the soybean market for sure. But, as far as trade aid, does it keep farmers from selling here? Does it give them a little bit longer window to try to market this crop later or not?
It probably does, especially if the payments come quick, direct deposit off of your past records, something like that. That just puts cash in farmers' hands, right? So then if they've got notes due, bills coming, they can use that to pay those bills and notes instead of selling the grain. So, historically, yeah, I could see a bump in these markets if you do get a nice payment out to farmers. But, does it change supply and demand? No, it doesn't.
Yeah, and if China, even if we get a deal and they come in, do you make up export for the exports that we've lost already? Because exports right now on a weekly basis are behind, aren't they?
Oh, they sure are. And the quick answer is no. We're going to run out of time. Our export window is right now. That's why I was a little surprised last week when this market rebounded so much with Trump saying that he was going to meet with President Xi in 4 weeks. I thought, well, 4 weeks is a long time for us to miss out on our export window again. Now, obviously, with the government shut down, China could be buying some beans from us. I don't think they are right now, but if we're close to a trade agreement, they probably would start buying. We'll probably hear some rumors or that like in the PNW, but I can tell you our basis hasn't improved enough to show that we're selling any beans to the PNW yet.
All right. Well, I was going to ask you if you thought China could quietly come in here and buy, because that's what they did in 2018 when the government was shut down.
It is funny that this government shutdown lines right up with another trade war with China. And maybe that's why the market isn't going down, Michelle. The whole great grain robbery from Russia years back, could that be happening? I mean, I really don't think so. Today, I would think with social media and everything else, word would get out, but it is set up nice for that. Now, I hope the government isn't shut down for 4 more weeks either until we get a trade deal done with China, but who knows? I hope they are, Michelle. I really do.
All right. Harvest pressure. Obviously, we should have seen a lot of it because it was a big, big week for soybean harvest last week. But at the same time, do you think maybe we're holding together because the yields aren't as good as expected because it's dry?
Yep. Yeah, absolutely. No, I'm glad you brought that up. I'm talking to a lot of producers throughout the nation. Soybeans go from 13% and everyone's happy to get started harvesting to 8%. And, last week, I mean, we were in the 90s and windy, even this far north. So we combine a lot of beans that I would say are air quotes too dry. And that reduces bushels. Last year we had that and I kind of thought, nah, it's not a big deal. Yeah, it was. It ended up really reducing the yield. We sell based on weight. And when there's less moisture in there, there's just less product. So I think that could be helping these markets too, especially corn. I talked to a producer in southern Minnesota. He's combining some corn this weekend. It was 20%. And by the time they shut down, because they thought it was actually so warm, they didn't want to risk fire. But by the time they started up again, the corn was 16% moisture, but the yield had dropped 30 bushels an acre. So there you go. Like I said, dry conditions equal a lower yield.
DuWayne, you're in the tractor cab here today. How much harvest have you guys done? What are your yields looking like out there?
Yield's not great, to be honest. I'm in Northeast South Dakota. We had just too many drowned outs, beans with wet feet. So where there's beans, there's fine. But if you have a zero out there, it drops yield quite a bit. So sadly, I think we're like in insurance claim areas here. Really 30 bushels an acre might get our farm here. Over in Western Minnesota, we got some acreage over there. That was around the 45 bushels an acre. Better, maybe a touch disappointed, just thought they might be a little higher.
Okay, the wheat market, we're barely off of contract lows here, but let's talk about what keeps pressuring that market. Now it sounds like Russia is actually going to lower their export tax, or was it the higher dollar today, or what?
I think it was both those two things. Other than that, it was a really quiet news day today for the wheat complex. On last week, USDA report, we did find some more bushels of wheat than we expected. So that's just keeping these markets down here. Seasonally, we should have made a low a long time ago, but when you're in a trade war, I don't know if seasonalities matter a lot this year, but this poor wheat market, man, I wish it would go up. I'm hearing more and more people in Northern Plains. That's the last year for me. I'm not raising wheat next year. So And maybe that's what we need. A less supply, the price will eventually go higher.
Cattle market had a nice day, once again led by the feeders. And is that the cash market pushing it, or was there some other news that drove the market on Monday?
I think was the fact that we didn't get a trade deal done with Brazil this morning. President Trump talked to their president there. And remember, we got that 50% tariff on their beef coming into the U.S., which basically closes the border. Well, they've got a lot of cheap beef there, and they're our number one buyer, our number one supplier when it comes to beef imports. So you take them out of the market, we rallied a lot, right? Recently, I assumed too that once they start talking, we would drop the tariffs, get a trade deal done, and we'd have a ton of beef coming in. Didn't happen this morning. They said they both sides have said it was a good conversation, that typical trade deal, good conversation tweet, but no trade deal done, no tariffs dropped. So I think the market really liked that. But you're right too, the cash feeder market is on fire, but cash fats have been lower last couple of weeks, and box beef has been sharply lower off the highs, up just a little bit at midday today. But I don't know, pretty impressive move. This cattle market just doesn't seem to want to die.
No, but we're holding major support areas that we needed to hold. So that's helping keep the funds at least somewhat interested in defending their position, or what?
Yeah, it seems like it. I think if we would have broke, say, 230 in these live cattle, I think the technical picture would have looked more bearish and funds probably would have exited. Or if the grain market looked a little bit more bullish or got a trade deal done with China, I think the funds would then exit some of these cattle positions and move over to grains. But right now, cattle been making good money. No, the futures market's held in really well compared to like the lower cash and lower cutouts. So very impressive market.
Yeah, I agree. A lot of people talking about that 230 in the December live cattle. That's the line in the sand that has to hold. Okay, hogs ended mixed. Nearby contracts under pressure, but technically we did some damage to that market last week, didn't we? So is the top in?
I think the top is in that market. I think it shouldn't have quite gone that high anyway, Michelle. I mean, cutouts and cash were good, and we had a little bit less supply than we thought here in the U.S., but it's not like we have to ration demand or anything. So I think we're pulling back to where cash and cutouts are. Probably seen the high. Market doesn't have to totally tumble lower, but yeah, I agree. I think we've seen the high.
All right, thanks for joining us. That's DuWayne Bosse with Bolt Marketing and Markets Now.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win, you get to be right. Don't just win. Talk with your retailer or visit Brevant.com/win to get started.